Our morning was more of a lecture format. Let's now move to discussion. We have two great panels of stakeholders and standard setters. So starting with stakeholders, there are many categories of stakeholders: banks, public companies, financial infrastructure entities, and so on. We can do dozens of panels, but we wanted just to provide a taste today, and not of the usual ones. So let me introduce our panel members, and then we'll cover several questions. Everyone will have an opportunity to respond briefly to the questions, and for the first question, I'll also invite everyone to say a few words about their role and how they are a stakeholder for the FDTA. Let me welcome Linda Savage, an industry value expert and global software modeling expert at systems company Dassault Systèmes, an OMG member. She'll speak for the technology vendor perspective and include her wisdom from her long career of business and technology senior roles at major asset management and mutual fund companies. Mike Willis is the Associate Director of the Office of Data Science and Innovation at the Securities and Exchange Commission and leads the structured disclosure standardization efforts at the Commission. He's also currently the chair of the Regulatory Oversight Committee that oversees the Global Legal Entity Identifier Foundation, which is responsible for the LEI development and its international implementation. He is also a true father of reporting in structured, machine-readable financial data in general, including the SEC's XBRL program. Now, you may be saying the SEC is a stakeholder, not a perpetrator. Well, the SEC didn't write these rules. Congress did, and the SEC, like the other agencies, and like all of us, needs to figure out what they mean and how to make them work. Lieve Watson is from Capital's Coalition, where she's a senior digitalization advisor and co-chair of the Carbon Call Expert Advisory Group. Lieve has also been involved for decades in all manner of machine-readable financial reporting, and is also a founding parent of XBRL, and globally, as much as domestically, where she's now deeply engaged in the ESG and sustainability sector. No, the FDTA does not as such address ESG, but agencies are increasingly asking for such data, and it could be encompassed. Marc Joffe was a celebrated Wall Street analyst when he made the move to policy research. Currently at the Cato Foundation, his research focuses on government, finance, and state policy issues, though his expertise and wisdom extends across the whole domain of data reporting using structured data and semantic technologies. He's been published by or featured in so many important news and analysis venues, such as the Reason Foundation, the Mercator Center at George Mason, the Center for Municipal Finance, and so on, and his op-eds have appeared in the Wall Street Journal, the National Review, and The Hill, among others. He's also the founding chairperson of the XBRL U.S. Standard Government Reporting Working Group, and is currently a member of the XBRL U.S. Board of Directors.
So let me jump into a couple of questions for you all to get started off with the discussion of your roles. Linda, let's start with you and turn on the switch. The FDTA, what do you see it as meaning for your organization? How will it affect, good or bad, your organization's ability to create value for your stakeholders? Through your technologies, through your products, through your services.
Thanks, David. And first, let me sort of preface my comments. I'm going to be speaking more from the perspective of the market and market participants. And within the FDTA, the financial markets are really focused on the muni bond market, which in the U.S. is a $4 trillion market, so it's sizable. And let me say that as a financial services practitioner, right, I am a fan of the FDTA. You know, anytime we can introduce standards around reporting, I think it's a win, and I think it makes sense. The bonus for me is going to be dragging the municipal bond market into the 21st century, which they badly need. As a financial partner as a technology partner to financial service firms, I see this as a nail in the coffin of document-based systems engineering, right? Now understand I'm from Dassault Systems, and we look at everything from a model-based systems engineering perspective. So this is all music to our ears, right? We are the digital twin, the virtual twin people. And I want to just indulge me for a second for a little commercial, because I think a lot of people in financial services do not know Dassault. Right? We're a global software firm with a little over 24,000 employees globally, over 25 million users. We are focused on sustainability and resilience through the use of digital twins. We call them virtual twins. We've spent the last 40 years helping the defense and automotive industry create digital twins of their entire ecosystems. And I'm really excited at the prospect of introducing that concept of a virtual twin to financial services. So back to the FDTA Act. You know, I sort of see this as part of a larger trend that we're seeing in the industry around firms and regulators really getting serious about digitalization and realizing the benefits of it beyond just operational efficiency, right? Digitalization is what's going to drive collaboration, resilience, security, and it's what's going to accelerate transformation of the entire ecosystem. So I'll stop there.
Well, let me just ask you, like a slight follow-up. I'm probably breaking my own rules here. But in some ways, you're kind of getting to some of the things that Jim Person was talking about this morning, right? And introducing the concept, less the AI itself, but the concept of twins, and the Digital Twin Consortium, which is the OMG Consortium, you know, is discussing this all day. And data may be a limiting factor for that working well, right?
Yes, absolutely. And I think you know, having that standardization is going to help with AI, but it's going to help with all the analytics and all the business decisions, the informed business decisions that these companies need to make.
Great, thank you. The lead, reaching online to you. Can you comment on that question? What does it mean to with the organization that you're in, which is in many ways a collective of many organizations?
Yeah, so first of all, thank you for the opportunity to participate. I mean, the discussion of data is so prevalent. This week I've been at the UN for Water Week, and I'm meeting with ISSB and others, and for the first time we kind of hear leadership, even if they haven't really realized what digitization means yet, that digital data is a must. So let me introduce myself first. Lee Watson, and I am Senior Advisor at Capital Coalition. Capital Coalition works to build out frameworks for companies to be able to manage their processes for assessing the value of natural capital and human capitals. What I do at Capital Coalition is a work stream that was started off when Impact Management Project was endorsed by the G20. They were set to create less confusion around the standard setters. So we were a 5-year project to be able to bring together all of the ESG sustainability standard setters and have a co-created roadmap on how they collaborate and eventually raise the money so that ISSB could become a standard, and we handed that over at COP26. While they were bringing all of these stakeholders together, of the CEO of all these standard setters, I got the opportunity to get those standard setters to agree that digitization was a high priority. And so for the last couple of years, then I started collaborating, as I was appointed by IMP to EFRAG, to write the European Sustainability Draft Standard. And it was during that time, since one of the mandates by the European Commission was to think digitally first. And what I realized that what we cannot let happen this time when we talk about digitization, and Mike Willis is there, so he will remember, and David, you will remember too, what we did with financial reporting, we tried to digitize that after the fact that they were written. And what we have today is two inoperable taxonomies, because EFRAG and IFRS are technically not aligned, and it's challenging for software vendors to embed that. I had then the experience before that to be with Workiva, and the platform, as some of you or many of you know, we grew very quickly because compliance is so costly, and these taxonomies, even though we standardize, are still challenging both to embed into solutions as well as for companies that has to meet those requirements. So when IMP kind of wrapped up, I had then the opportunity through fundraising, through philanthropy, developing something we call the DSD project. And the DSD project has been funded by philanthropy from Climate Work, Porticus, and Tipping Point. And what we have done over the last 12, 13 months is coordinating with the interested security regulators, ISSB, IFRS, and GRI and others are coming together to look at what is best practices for disclosure, because for the first time standard setter is running faster than the market. What does that look like? And so we meet every other week, so to build out those proposed best practices for digital disclosure, and I can go into more detail what they are. But you asked the question, what is the value to my organization? We realize that this coordinated effort for getting best practices around digitizing sustainability data also needs to have feedback to the standard setter so that they rethink how they write prescriptive. So it's been a dialogue back to the standard setters. And is it perfect? No, but at least we're making progress and have some influence on the standard setter, because now we can talk to them about this is where technically it's not possible to align. Here is where you should align, and other discussions. So the discussion with the standard setter to digitize is on the agenda of the Capital Coalition, and that is the project that I lead. And I happily speak more about that in a broader sense, but from a disclosure perspective, that is a project that I've been coordinating and help raise the money to connect standard setter security regulators. We were endorsed by IOSCO and IFRS and ISSB at COP27 in Egypt as a vital project that needs to be solved and continue. So we have gotten more funding, and we are funded so that we can continue this work for some time forward. So I wanted to give that perspective, is that just because we think digitization, the key point is the content and the standard has to be written in a way that they lend themselves to more prescriptive digitization of this data. So we can't just, we got to work with the content developer, the standard setters, to reduce the understanding, because most people that write standards do not think digitally, and we have a lot of work to do there. Thank you, David, for the opportunity, but OMG, you also are an important part of the solution here, because if we cannot think, like the panel said, that if we still think document and not modeling this data, we are never going to be able to get this data. That company needs to report and meet the regulatory requirements. So OMG, you have a big shoe to step into.
I think you're pointing out that you know, the really interesting challenge is it's not always that there aren't standards. Sometimes there are too many or so many. And how do you connect them together? What's the model that maybe will connect them all, or how do we interrelate them? And you're kind of at the nexus of so many organizations that have been thinking about this. That was great, David, and thank you very much. If I can look to you, Marc, right, on the same question, you speak for a different kind of set of stakeholders. The general public, policymakers who read what you're doing, corporations who read what you're doing. What are you hearing? And you don't feel free, as I know you'll feel free not to restrict yourself to you know, to municipal government and the like.
Sure. Thanks for having me. You know, I'm part of a community of academic and think tank researchers and journalists who, you know, want to understand government finance. We want to understand which governments might be in financial distress, which governments are prioritizing spending differently, you know, which governments are spending more money on pensions or retiree health benefits relative to their revenue than other governments. You know, those type of questions. And you know, we really, to answer those questions, we have two difficult choices. You know, one option is to rely on census data, and the census has been collecting state and local finance data for over 100 years. But unfortunately, the data is available on a 2.5-year lag. It's very limited in terms of the number of data elements that are provided. And perhaps most importantly, it does not foot to audited financial statements produced by the many governments that are filing such statements. In fact, there are about 30,000 of the 90,000 US governments that produce audited financial statements. So the other option that we have that we often use is to dive in, try to locate those statements either on the Municipal Securities Rulemaking Board website or perhaps on the entity's website or maybe a state repository, and then dive into PDFs, which can often range up to 300 or 400 pages, to find standardized data that we can then copy into a spreadsheet. And you know, this is just really an unfortunate model for, you know, monitoring a sector of the U.S. economy that really accounts for about 10 or 11% of economic activity, and is just systematically important for taxpayers, beneficiaries of government services, government employees, and so forth. So I'm really excited about the prospect of FDTA to you know, bring this, I think, to sort of build on what Linda was saying, and bring this whole municipal bond industry into the 21st century, kicking and screaming perhaps, and really provide much better and more timely data for those of us who are researching government and trying to hold it accountable.
Thank you, Marc. And as an aside here, kicking and screaming, I do remember that even in the late 2000s, when we were contemplating, you know, state and local governments, it was quite a challenge, and it sounds like it's something that will finally happen. But yeah, Mike, I'm going to skip to the next question. And I'd sent out some questions in advance. This wasn't meant to be a gotcha, but a learning experience. Right, you have your sets of stakeholders are unique and uniquely interesting. What do you think that FDTA will mean to the analysts, to the retail investors, to the institutional investors, to the others out there who who presumably are supposed to benefit from this kind of work? And you probably have a disclaimer that you want to.
I do as well. I'll get that out of the way. The Securities and Exchange Commission has run a policy that claims responsibility of any private publication or statement and its employees, and therefore views expressed today are my own and not those. To get to your question, this is like a standardization of the supply chain. This is not a new idea. This is an old idea. And so I think we should expect the benefits to be very similar when we standardize the supply chain. Lower cost, enhanced quality, accelerated frequency, enhanced process agility, improved analytics, through comparisons of all kinds of things. Just think about the grocery store and what happens down the barcode. I mean, why is the financial services sector 50 years behind the grocery store sector? I mean, it's amazing to me. So I think, in short, that's what people can expect. Lower cost, greater throughput, more accuracy. That's a good outcome for people. And when I say it's not new, President Bill Clinton signed the National Transfer Technology Act that encouraged agencies to use market standards. And here we are again, it's like an AT&T commercial, can you hear me now? And I think the key idea here is market standards, and to the extent that regulators can use those, that's a win-win for everybody.
Great. Thank you very much, and well done on this thing. Linda, can you follow up on that? I mean, you're dealing with, you talk a bit about your stakeholders. Where do you see that they'll be able to look back at you and say, okay, you didn't just do something I had to do, thanks, but whatever. Where does this create new opportunities?
Well, I mean, I think it's important to sort of understand the muni market, right? As it stands now, munis are diabolically hard to evaluate and compare, and to do it quickly and efficiently, right? As we pointed out, there's a 2-year lag, right? So my previous life included 20 plus years on the investment management side. And there I saw the effects of the democratization of data and the proliferation. And it eliminated whole business models and it changed others, right? So as these firms drive towards efficiency and alpha, I think the FDTA could really help the buy side, right? Munis come in so many different shapes and sizes, right? Revenue bonds, you have general obligations, you have subordinated debt, you have all sorts of building loans, right? You have different accounting standards based on them, and then you have the issues. You've got states, municipalities, towns, and then you layer all of that on top of the regular fixed income metrics around duration, credit, and yield. And that's a lot of data for somebody to wade through. So I think having a modicum of standardization, anything that we can do to make that quicker and easier for these buy-side analysts is going to help. And I think Mike is spot on. Not only is it going to help the buy side, but I think it's really going to help the issuers, right? The sell side in this case, because I think it will help the issuers understand where they are in the market, where their issues are competitive or not. And I think it's going to drive down fees, so rating agencies and underwriting and legal fees. I mean, that's my hope, but who knows?
Very well said. I might suspect, and Marc, if you want to jump in, I mean, how does this, the same idea relate to how banks like, SVB and others are making that information, some of which is standardized today, right? But, will broader information, provide opportunities for better decision making for the banks or for the financial institutions themselves, as well as for those who evaluate them, for the markets or for the government. Marc,
yeah, definitely. Before I got involved with looking at municipal securities, I worked at Moody's in structured finance just before the financial crisis of 2008, and saw a lot of problems with collecting data on residential mortgage-backed securities and CDOs and CLOs and so forth. And if there were better data standards back then, maybe the financial crisis would have been diagnosed and perhaps ameliorated somewhat earlier. And I think that goes back to the point of democratizing data access. So one of the dysfunctionalities of the mid-2000 period was that really it was only the credit rating agencies that had complete access to this information, because we were sending voluminous PDFs out to our satellite offices or our contractors in India to have them rekeyed into spreadsheets so that we can analyze them. But then the problem that we had as rating agencies was we were conflicted. We were really, being paid by and thus advocating for the securities issuers instead of the investor. So you can imagine a parallel universe where all the detailed information about the structure of a structured finance instrument and all the collateral going into that instrument was just freely available to the public, so any investor could see it and do his or her own analysis. I just think we would have, had identified a lot of the problems earlier and perhaps had a much lesser financial crisis than we did.
Levi, I bet you have a lot to say on that too. I do want to ask you another question, although you'll probably choose to address this one as well. But you've been in the data standards realm for a long time, and you've worked with different organizations and the different processes for developing and promulgating and then maintaining standards. And sometimes it seems like a cast of thousands, are necessary to make it work. How do you think that the organizations you work with, your stakeholders, should be trying to participate directly, indirectly, in the development of the standards, as well as the next level of standards that might relate all of these different standards?
Yeah, and thank you, David. Standards and digitization and the many different stakeholders. I want to make one comment before I talk about the data and specific, since Marc, you mentioned financial crisis, and now we have another bank. But when you look at the bank, it wasn't just, financially that there were issues, but there were 8 months since they had a risk officers in place. They had a board member that sat on the oversight board of the Federal Reserve. So my point is, we got governance issues that we got to deal with as well, that goes into the standard setting that maybe don't necessarily always lend themselves to tag data and standardization. But what we have is what I want to just give you an example of something that I co-chair something called the Carbon Call. And under the Carbon Call, we brought together multi-stakeholder to look at the data stream of just carbon. There are 47 data modeling organizations that models the same basic data. How do we bring all of them in a room so that we can actually have interoperability and co-create this supply chain that Mike always talks about, which I think is a huge value to everybody, is to understand the UPC code and the benefit there that it did to the whole industry. But to get really data to the marketplace, we need not just reporting, but we got to fix the accounting. A lot of this data is not even connected, and I'm specifically focused on carbon and climate, to the financial system. So even if the data we get out, how accurate is that? It never went through internal control. It was never processed or signed off on by a CFO because it has been voluntary. So you're seeing such a huge change that now these issues are going to flow up. So what is happening right now? I have brought this attention all the way up to the UN. And we need to coordinate an effort to bring everybody together who's developing data standards and data models and actually come and agree to collaborate and co-create. And we might find out that we did the same thing that happened with ISSB. They agreed to consolidate. So I feel that we as standards organization, as I'm one of the founders of XBRL, etc., we have a fiduciary obligation now to collaborate with the others that has try to move this along, and OMG the same. We need to bring the tent, and we got to build the tent together, and we got to play well together, because the marketplace really needs us to do that. I'll turn it back to you, David, but more important, like when you bring out OMG, who is standing here, built standards for, gosh, as long as XBRL, we need to lead that dialogue. We really need to step up because there are so many. There is more calls every week with somebody that has a new idea for a data model that calls me and says their model is better than others.
Well, Lee, thanks for that answer. I mean, you're basically invoking here this interoperability issue that we talked about earlier, that maybe there needs to be a model or something at a higher level. FDTA mostly addresses reporting standards, not explicitly how they're connected. On that, and for the last question, because we're running a bit short, I wanted to turn it over to Marc, because you've got, in some ways, you able to exercise a God's eye view. I didn't say you're God, but the God's eye view on that. In terms of the how FDTA, the minds of regulators and the minds of others who might want to communicate with the regulators and engage to make this as good as possible. What will happen? What's the opportunity to make things better by spending time also upstream in the financial reporting chain, right? And working on models and how to connect all these pieces.
Yeah, thanks, David. I wanted to take this opportunity to, direct everyone here to the fact that while those of us who've been working on this municipal opportunity have been really focused on financial statements, there's a lot of municipal disclosure, and one of the most important ones for regulators and other people who want to do, upstream analysis is the official statement, which is the municipal bond market term for a prospectus. So each time a local government or state government issues bonds, they produce a voluminous prospectus, and those are all available on the MSRB's EMA website. Well, it turns out that you can dive into those prospectuses and you can find irregularities, and researchers have done that in the past. Or I should say regulators have done that in the past. So for example, there was one incident in which an underwriter charged, I think, about 5% of the cost of the face value of the bond as an underwriting fee. And FINRA determined that that was an excessive charge and levied a fine against the underwriter. So that was difficult to research because either someone had to complain or somebody had to dive into literally tens of thousands of prospectuses to try to find out what the underwriting fees were. If that was provided as structured data, that kind of analysis would be much easier. Another case was, in the day after a bond was issued, the yield on the bond changed materially by about, I think, 200 basis points from what it had been at the offering. So that indicated that some insider trading was going on. And again, if you had systematically collected in a regulatory database all the bond yields, and then you compare it to the trade activity, which is already digitized, you'd be able to find more violations of that. And it might be funny, for people to hear someone from a libertarian think tank talk about the need for more regulations, but it's important to understand that this is hurting taxpayers. So if middlemen, middle women are extracting more from local government than they should in the financialization process, that's bad for taxpayers. And so I think it's something, regardless of where you sit on the political spectrum, we should be concerned about.
Thank you, Marc. And I think there are a couple of really good webinar ideas in there to discuss the philosophical engagement with all this, but not today, not now. Thank you very much to the panel.